Hi everyone, Stuart here again. It's Thursday, the 15th of November. It's the King's birthday here in sunny London, sunny UK, if anybody really cares. To be honest, he's 76 today, so happy birthday, Your Highness, I suppose. It's big news today. It's been relatively quiet this morning. We've had some relatively good positive jobs out of the European sector this morning. We've had a speech by Catherine Mann. She's she was the main dissenter in the last, the last monetary policy meeting from the United Kingdom. And again, she stuck to she mentioned about why she was that dissenter and why she expected or wanted to keep UK interest rates at 5%. The other key thing this morning has been the backward looking, obviously the monetary policy, the meeting minutes from the ECB as well. Nothing particularly new in there. We didn't see any particular move on that, but we've generally seen a stronger dollar. The euro here, just quickly flick to the euro chart. The euro here today has been edging lower. This is start of today, this morning. We're under that key 106 level. And the other key level we got to, the hugely important 105. 105 sort of combines the impact of a round number 105000, but it's also got 5 in it as well. And psychologically and historically, we see these levels are very, very important and get played to. But obviously, there's very little enthusiasm for taking the euro beyond 105, certainly so far this morning, today. So we went into it, tested literally for a 5-minute, this is a 5-minute candle, literally for a few minutes, and then we bought it, or the market bought it down here at the 105 level. Lots of probably automated trades clicking in then. This strategy we looked at yesterday, I'll leave this on for a few days and I'll go through explain how this pans out. This strategy then triggered long here. We had a missed trade here that ended up flat. It was trying to go long and it didn't. You see, it didn't work out because the MACD crossed here. You can see the parabolic star flipped the next, but we bought in right at the top of that and then it flipped it and stopped us out. This one's been running. It's just flipped out a few minutes ago before I came live, and that was so we got in here at 105.20 and it took us up to 105.37, 17 pips, nice and simple, and it's looking to perhaps cross again at the moment, but we're out of the euro position at the moment. As I say, the minutes was not really market moving. Elsewhere this morning, remember we put on our highs and lows of the day. This is the gold chart, guys. Again, the 5-minute time frame. So we zoom that one in a bit. You see, we started at the high of the day, interestingly, and then we've drifted down through the Asian session, down to the early part of the European session, pushing our low of the day. So low of the day was 25.35 so far this morning. And then we've bounced and moved up. So the last trade on this strategy would have triggered here at 20. Here you can see the golden line. Hopefully you can see that. Yeah, you should be able to see that. At 25 minutes past 10. Is it my time? Yes, it is my time. So 25 minutes past 10 UTC time. And it's rallied and rallied and rallied. And then we just flipped here again just before we came live this afternoon. And then this gold has actually flipped short. We got short here, short here at 12.45, but then it's flipped back again. So it's a flat trade. So it's a losing trade, isn't it, as we've gone there? So maybe looking to go long. And that's obviously the issue with short-term trading. You're in and out quite quickly, lots of opportunities. The MACD smooths out the flippiness, the choppiness of the parabolic SAR, but they will combine quite well together. So obviously choose your time frame, one that works for you. If you're a short-term trade, look at these shorter time frames, but be aware of what's the higher time frame doing. So we've got a bit of see here, sort of not much action really on the gold market so far today for that big move down. So we like to see some moves, but we certainly been taken some pips out of that one. The other big platform I trade a lot is the DAX, the German Ger 40 or the DAX. Now we've had a nice old run this morning, earlier on this morning, 7 o'clock. So I just had the first look at the chart. So we've done nothing at all here in the Asian session. The Europeans come to life, and we had a nice run there. We topped out up here. You see we flipped out here, and we got the next cross was there. So that was from here to here. Yeah, still 10 minutes. I'll come back to the PPI in a minute. I'm just showing you what's gone on this morning. Then it's again, see, it wasn't a clear cross here with the MACD, KND line here. So looked like we were going to go long, didn't work out. That was a flat trade, that was a losing trade. But again, literally as I came, as I was opening all these up again before our webinar today, we've got this long position here on the DAX, which is currently in the money. We've only got a 0.02 lot size on that, so you know, $20, $20, $30 to the good at the moment, and zoom this up so you can see it a bit better. Just check there we are. It's a bit clearer, isn't it, on these short time frames? But as you can see here, we had again, it's not a significant cross, but there's the one that stopped us out. We then went long here, but minor movement really. Look at the histogram here. It's not a great deal of movement. See, the size of the candles are quite short and narrow. It's not big ones like we had here earlier on this morning as we're moving up. So we're ahead of the US Open. So we're moving up. We got in wherever we got in. I can't remember. 19. Where are we? 202.7995. So to say 280 for sake of splitting hairs, and we're currently at 292. So we're up 100 points at the moment. So it's trending to the upside, and see how that goes. Our stop losses down here at 2030. And again, I'll go through. Once we've gone through the news, I'll go through some of the setups, because this platform is really super intuitive about how to set up your trades. I really, really like it. I haven't been as excited about a new platform for a very long time, to be honest. You get stuck in your ways. You use things that work for you. You know they work time and time again. But this is a really quite sexy, simple to use, easy to understand platform when it comes to placing your trades, and you know how much you want to lose or how much you want to win. Do you want to do it in percentages? Do you want to do it in dollar terms? Most people understand dollar terms. I'll talk about the psychology of using dollars as opposed to percentages later on, and I'll do a whole webinar on that. Because when you start thinking in dollars, guys, when you start thinking in money, I want to make $50, or I want to make $100, or I want to make $1,000 today, that sits in your subconscious, and it adds to your day-to-day general stress, because you're trying to think. If you think in sort of just, I want to make 0.5%, doesn't sound very much, or I want to make 1%, it's less sort of impactful on your subconscious. So I always recommend to think in percentages rather than dollar terms. But it's what works for you. Just because it works for me, it might not have the same cadence for you. So as I say, what works for you. So anyway, the main reason we were here today was to look at the PPI data. Remember PPI? Here we are. Is the producer price index. So this is the what people that make stuff, producers, what they're having to spend on the inputs into their system. So whether it's the services or construction or manufacturing companies, what the people that are ordering the goods, the things that these companies need to make stuff, what's it costing? So currently, we have an expectation of a bit of tick up. Can you see that? The core going up to 3% from 2.8%, and the year-on-year going up a bit more significantly to 2.3% from 1.8% last time. Again, I'd make that more of a significant impact. It's only got a 1 low volatility indicator there. I'd have had that different, but different calendars have different views on things. So lots of input data. Obviously, this strip out some of the more volatile parts of the day, things like energy and food, to give the core reading as well. So watch that in literally 5 minutes. The other key event on a Thursday, every Thursday, 8:30 New York time, 13:30 GMT, is the weekly jobs claim. So 220,000 last week, 221,000 last week. Excuse me. And expected just to tick up a wee bit, but it's still very much at the low end of the spectrum. So this has been a very, very robust US economy throughout 2024. The jobs have held up. Inflation's come down quite considerably, obviously down to this 2.4%. Now we ticked up yesterday at 2.6%. So there's still some resilience in there. So we'll see what the Fed has done, how it's impacted the Fed's rate cutting cycle. Obviously, they've gone, they're due to go again. That 25 basis points, but obviously the new incoming president from January when it's inaugurated will have something to say. Two very hawkish candidates for the Treasury Secretary position, the position that's currently held by Janet Yellen for President Biden, head of a big trading house, Cantor Fitzgerald, I think it is, and another guy whose name just escapes me at the moment, but very much in the Trump mold, very much deregulators, very much, as far as the markets are concerned, inflationary pressures likely to rise with Trump's approach. Trader 85, where do you think Bitcoin is heading? Well, yesterday, Trader 84, let's just go back to Bitcoin. I've got a Bitcoin chart here. To the moon, people would say. There was a very, very interesting article I read this morning in the FT. FT is the Financial Times in the UK, from Katie Martin, an editor and a journalist I respect very, very highly. She's very astute. Saying, what is crypto or Bitcoin in particular? What is it? What's it worth? Is it really something you can't buy a cup of coffee with or a pizza in the UK with at the moment? Probably are some places you can do that actually, but it's 34% Bitcoin has rallied, 34% since the election. This year it's up phenomenally. This line here, 93,500 is where we got to yesterday, new all-time high. And we were chatting on our Discord links channels yesterday, and one of my colleagues, Theo, put on a little video he'd found, or he'd seen, not he'd found, but he'd seen back in 2013 when there was a guy talking about Bitcoin getting to $100. And it being a significant moment, and obviously it is because it's a big round number, $100. But that was in 2013, and here we are, just over 10 years later, and we're at $93,000. It's been obviously a very, very volatile and rocky road. And I remember again on that thread, I shared a little chart I'd done in 2017 as the Bitcoin went through $1,000 on the 4th of January 2017, and by the end of 2017 it'd gone all the way to 7,000. So it'd gone from $1,000 to $7,000 in 2017. And I say again, and here we are now, 93,000. We all know what happened in 2017 and 2018, and then the crash that's come. To answer your question, Trader 25, I do dribble on, don't I? The trend is up, and it's how far this has got to run at the moment. If we just go to the daily time frame, regardless of what what's happening, as a trend following strategy, this is mental, isn't it? It's just run. Obviously, you only make a profit on it when you get out of it. So these are all, if you bought it down here, these are only, I don't know why that's only doing it from the last few days, but maybe let me just ring. There we are. As with any, it's a massive parabolic rise since last week. I said 34% we've rallied in just over 7 days. Massive rally. But if you bought this at 20,000 or 50,000, you've doubled your money, but only if you cash it in, only if you sell it. You haven't made that money. It's all just paper to it. And again, that's part of investing. It's part of trading. You've got to get your head around these sort of things. PPI in a minute. Let's have a look how it's come out. See what it's. Let's go back to euro. You're right. Will gold continue to fall again? It's correlated to a stronger dollar. Trader 84, simply because the expectations is that Trump's policies and coinciding with obviously what the Fed are doing will cause pressure on gold. And you can see gold has capitulated as much as crypto has rallied. If we've got the daily chart again. Again, I'm sure you don't need me to show you this, but yeah, a big rollover into this key level. I put this on the chart the other day, and I can't see where it is, but there was some key levels you can see on this daily time frame. 2600 being one of them, which we've given up already. We're at 2550, and that was the next level here. You can see this resistance level here. But at the end of the summer here, at the end of August, beginning of September for gold. So we're coming into that zone now. And the next level down, as you can see here on the daily time frame, is this level here at 2475. Let's put that on here while I was on here. Again, it's just previous levels become key. That round about that 2475 level. I'll put it on 6.6, but you can see that next level down. So it's it's stepping down. But as you can see, it went up quite slowly to this, new all-time high. But we've come down very aggressively just ahead of the election, and then as Trump's got in here on the 6th, it's massive unwind, wasn't it? And huge move down for gold. So yes, the trend is to the downside. But next support it's already been tested at this 25.35 level up here. You could say it with next level. It's actually a wee bit below that 2500 itself. So 2500, I'd say 84 is the next level down. Anyway, I've talked through the data coming out. Let's just where are we? PPI. So again, it's a bit like yesterday. It's more or less in line with expectations as PPI, and I'll come to the hot jobs numbers again. It's 217, nice one. So core is hotter than expected at again, I think it's more than one low volatility expected, but 3.1% from 2.9%. Again, that's been upgraded from 2.8%. So there's definitely more inflationary pressures in the US market starting to tick up again, especially this one where you strip out the food, that's at 3.5%, and the transport and the energy is ticked up. But I say on the flip side, on the positive side, is job claims down again. It's 4,000 to the downside. It's coming better than expected, but the PPI is more or less in line, but again, edging to the hotter side. So you would expect a bit of a move down against or for the dollar, and that's exactly what we've seen here. So that trade that triggered here has stopped out as that's flipped down here. So it's a losing trend on that euro move down. So are we going to see the same follow through we saw yesterday, where the dollar weakened and then came back? Today we're seeing the dollar strengthening before we're going to come back. So that's flipped lower on that. So we'd see if that continues to move down. Our DAX trade that was in the money has turned negative. So that's a turn down on the DAX move ahead of the data. That's the risk of opening stuff before the news comes out. But we'll see if that crosses again on this 5-minute time frame. End up a losing trade. We'll close that out if it does flip. So look, Bitcoin. So we go back to Bitcoin, the 5-minute time frame on that news coming out. Let's just reset that. Reset that a wee bit bigger. So Bitcoin had already rolled over for, hang on, is that 5 minutes yet? Sorry, that was our high of the day, the 91.70 earlier. So that's our high of the day. I didn't put the low of the day, or didn't? Was it this? No, it's a thick line. Yeah. So that's our range for the day. These levels, these two lines here for yellow. So Bitcoin continues to move down as the dollar's improved on that PPI data, and probably more importantly, the jobs number being better and stronger than expected. So Bitcoin rolling over. You can't see the cross on this one here. Just where's my? But yeah, that continues to unwind. See the euros. Yeah, so the euros weakened significantly. We'll close that one out. Oh, we flipped. That should have, see, that was long. That would have flipped there automatically. I was obviously chatting to you guys, and then it's taken a short here. So we close this one, confirm. But again, on a 5-minute time frame, if we're going to follow the strategy, we've had a cross here. So we had a we had a flip with a parabolic SARS here, as you can see. So it took us out that long, and that's sufficient to take. So that would have triggered a short trade because they've already flipped. So we're going to take a short position now. Let me make this a wee bit bigger, so hopefully you can see the trade. See over here on the left-hand side of the screen, the different market panels. So if you want a full screen of your chart, you just get rid of all the market panels. So that's my order positions disappeared, and that's my position sort of squeezed down to there. So we got the full chart. But as you can see here, that strategy would have triggered short here. It's a bit lit on. Let's actually get in. I suppose let's open a position. So there's different ways of opening position. You just obviously go, as we're going to do, open a market position, either buy or sell. So we want to sell this one. This is what the market is offering me. Standard default on this demo is 0.02 lot size. So you can either decide how you want to, where you want to place your stop loss. So do you want it as a percentage? Do you want it as an actual absolute number? So let's say the maximum I want to risk on this is $50, and that's only, it's less than half of 1%. So that, that's nice and comfortable. Actually, I think I can risk a bit more than that. I think 2% is my sort of risk. So here I can have I would lose $208 on my account, and it means my stop loss is all the way down there at 115.59. Sorry, my stop loss is all the way up there at 115, all the way up the top of our chart. If I'm happy to lose 2% of my position. So let's do it that way around for a change, and now automatically open the sell position. Okay, so let me just cancel that and see what I do. If on the other hand you then want to put a take profit in as well, you can again manually put that in, or you could put it as a balance. So I want to make, let's say I want to make 3%. If I want to lose 2%, so I want to make 3%. So we've got to get so the system automatically calculates how much I'll make, how many ticks we've got to move, and what price it needs to get down to. So it's a huge move down there. And that's been 3% of my whole balance. So let's just do it a different way. If you don't want to do it that way around, let's get rid of that. You could actually put the value in that you want it, the stop loss. So if we're stopping here, I quite like where the parabolic SAR is. So it's 105.43. So I can put it in manually again, 1.0543. And that gives me that very, very small loss on my whole account with just a small lot size. So again, I could increase my lot size if I wanted to have my stop loss there. So if I increased backspace there, so if I increase that to say 3, you see it automatically increases the risk because I'm going up. So if I went to backspace 0.3, a huge difference, I'm going to lose potentially 0.6% on that position if we have our stop loss at 105.43. And as you can see, the system automatically puts in what you're doing. So this is the corresponding dollar loss that you can see, 60. See how it's changing there? It's corresponding, both changing at the same time. The percentage number is this number, percentage of my account I'll be losing here with that stop loss there, and that's the number of ticks that we're losing. Okay, so that's the most important thing. How much are you prepared to lose? How much can you cope with losing if it goes wrong? Is it a percentage? Is it a dollar number? It's very, very simple, very, very intuitive to put on. Okay, so this trade is still valid, even though it's pinged down and it's now pinging back up. I'll just do it just for demonstration purposes. So we'll put a sell position on here. Hang on a minute. It's not It's not working. Well, that's because I haven't put a take profit in, that's right. So I want to sell, sell this position at 105.2 is where I'm going to get in. Down here, my stop loss is back up here, where my this line is here, and I'm going to lose 0.65 of 1% if this goes wrong. So I'll click that. Now then, I haven't got one-click trading on. So if I'd automated one-click trading, it would have automatically placed the trade. It's not on. You simply toggle it on and off, and it's up. You see that it's updating my settings. So there we go. I've got one-click trading on now. I'm going to turn it off, and it's updating my settings. Obviously, all the time the market's moving all the time, but my positions are still valid. So I'll confirm, and the order's placed, and you can see here in the order panel, or the order panel down here, that this is the position we've opened. It's Euro USD. It's a sell position. That was our lot size. That was our entry. That's the current price. That's where our stop loss is placed. We didn't put a take profit, did we? This is the margin that's being used in my account, my simulated account. This is the exposure into the market by the volume and the price. This actually has a fee on it, and we're currently down $10 or $9, $10, $11 to the downside. Okay, so but as far as the strategy is concerned, it's still valid because it crossed here, that had flipped there. Obviously we got in a wee bit late, but as our stop loss, there's our entry, and we're currently out of the money by $15. It's sort of bouncing against us at the moment. So very, very intuitive, very, very simple way of placing trades and getting into the market. Okay, I really, really like it. As I've been trading a long time, I've looked at lots of different platforms, but this is it's taken, you know, a big step forward. It's very, very intuitive, and I really, really like it. So the best of luck to you all taking our challenges. So so generally I mean, it was quite a significant reaction, as you can see there on that US data for the day. That is the main news of the day as far as the dollar is concerned. Lots of chatter from central bank speakers as well today, as I said earlier, as I said yesterday, at the beginning of the week as well. So none more so than some heads of the central banks. All three of them have got to speak this afternoon. So Mr. Bailey has two speaking announcements today. One at 6 o'clock my time, and then later on tonight he's speaking at the Mansion House, the city grandees in London all get together. Perhaps more importantly, I should say, so as far as the markets are concerned, Chair Powell, with his first real utterances since the re-election of Mr. Trump, he won't get called into commenting on that at all. I'm absolutely sure of that. It doesn't actually tell you where he's speaking on this platform, does it? That's just where these last spoke. Now click here for whole event detail. Oh, there we go. It's the speaker said no, it doesn't actually say what event it is. Never mind. So there's our what we just seen, 2.4% with the producer price index. Let's click out of that one. Back to our calendar. So yeah, so Powell speaks at 8 o'clock first. Bailey's on at 6 o'clock my time, so in 5 hours, and Bailey speaks again at 9 o'clock after Powell's had his chance on the mic. Mr. Williams, he's the one of the deputies at the FOMC, the head of New York Federal Reserve. He's a significant influencer on policies, so he'll have something to say as well. So we could see more activity later on today when some of these the central bankers get to their microphones as well. Overnight we got GDP, or late tonight we got GDP from Japan as well. Obviously we've got the unwinding of the political situation in Japan, which is causing lots of headaches, and dollar yen, which I haven't actually looked at for a while. Should we have a quick look at dollar yen? So I want to do platform, so I bring up Right, to my trade panels, bring up my market panels, so my majors. So I'll just click on the one I've just been interested in, talk about the yen. So this will automatically take the profile that I've got set up, which is the MACD. I've got it the MACD SAR setup, but as you can see, perhaps you can't see. I probably haven't seen before. There's lots of different setups. This is another one of my favorites, the EMA. So using 3 moving averages. Let's change the new setup. So it takes a while to load. There we are. So 3 simple moving averages. I'm saying they're not simple moving, they're exponential moving averages. The 5, the 9, and the 21. Again, it's 3 I've used for a long time. I know people use 5, 3, and 21, or 5, 3, and 9, but it's what works for you guys. I know people that use 8 and 3. It's but I like the faster moving one. So we got a fast, a medium, and a slow. Basically, again, it's a trend following strategy. So you get in when the strategy is crossing. So we've got a cross here. This is the what's this? This is the hourly chart on the dollar yen, and again, that's been all day. Yesterday it was moving higher, and today we've been moving higher as well, supported by the 21 down here. So these are still in alignment. They haven't crossed. See how they haven't crossed? So we're waiting. Our strategy gets us in when we cross. When markets are going sideways like we have here, it's no good. It's not working. You end up with losing trades, or very small losing trades. But you can see the last cross was here, the 5 crossing the 9. That's positive, and we're above the 21. So off we go, and we just trail our stop loss up as we go. We then came down, but we didn't see the moving average haven't crossed until here, where we've gone down. So that would have been given back a lot of our profits on that arrow there yesterday as the CPI data came out. We had that initial reaction of the weaker dollar, and then as the day wore on, we rallied up. So we might see we've had a sort of converse reaction today. The dollar improved, didn't it, in that first 5 minutes or so, but we'll see how that goes. And it's improved into the close yesterday, and it's been stronger this morning, and we've been over 156 today for the first time in a while as well. So if we go to the next level up, at the 4-hour time frame, that you can see here on the 4-hour, the last major trigger was here on the 10th of November, and it's been long ever since. See how they're in alignment. There's been no cross of the moving average, so you stay in the trade or you add to the trade. So here you might have thought of taking some profit as we've had this down candle, but we didn't. The moving average didn't cross to say get out. You would have perhaps been stopped out in that time frame, because the moving average might have been there, but then you would have pushed. That would have triggered another entry here on the side of the engulfing candle. What's going on here on the size of the engulfing candle? This big candle here has taken out all these previous 4 or 5 candles. The moving average is still aligned, so you would have added again here. I would have added again here. The three big white soldiers, positive over the 5 and the 9, went against us again. But now my stop loss would be round about here. Big follow through candle, and if you've been quite aggressive, this trend is still open. We went through this high from 7th of November as well last week on this big candle here yesterday after the CPI data, excuse me. And my stop loss currently would be here on this particular strategy, 4 or 5 candles behind the trend. But as I say, we've gone through 156 this morning, and this trend or this trade started back here at 153. So a very strong move. The only caveat for me really is the weakness of the ATR. The range on the candles is starting to decline. You see the ATR moving down. So the emphasis to the upside here on this 4-hour time frame, just maybe question, but at the moment, if you've got your stop loss there, you're still in the money quite nicely. Aggressive traders might have entered again here on this big-ish candle here as we went to test 156, but my last entry would have been there, and I'm scaling still in, probably fully in now on this particular 4-hour setup. So it all depends on obviously your time frames, guys. So any more questions? Anything you'd like to see, Trader 84? I hope I've answered your questions. Let's say yes. I've still got your gold questions up. As you can see, again, just on the platform, you know, this is the gold time. This is the gold chart on the with the MACD SAR setup. But if I just load the layout we've just been looking at, the exponential moving average cross, again, you can see the strong trend that we've had. It's still taking us to the 4-hour time frame, because that's the one we were looking at previously, isn't it? So the yes, you can see it's perhaps more clear than that previous chart. We've got the daily on this one as well, as we saw on the other chart. Yeah, that's very much you know, we had a really nice run up, again supported by the 20 support, but the big unwind post election day for gold was the 6th of November. And again, here you've got the opposite of what we've just been looking at on the dollar yen chart, where we've got the ATR, the average true range, the size of the candles, the distance the asset is moving, has unwound really aggressively. So through the key 2600, and here we are testing 2550. Again, you can see that how clearly that was a resistance area over here, as we were trying to go up here at the end of the summer, the end of August, into the beginning part of September. Eventually broke up here on the 12th of September, and then rallied up to our close to 2800, didn't we? No holding back gold, it appeared, but that's given up the ghost on the stronger dollar, Trump's trade, Trump in the White House, the clean sweep as well. They finally got to 218 in the House of Representatives as well. So it's a clean red wall with a Republican president, a Republican Senate, both the Congress, sorry, both the Senate and the House of Representatives. So clear mandate for Mr. Trump, he would say, and he's you know, the people he's nominated are clearly believers and followers in the Trump philosophy. So interesting times ahead for everyone, from China to Iran to the Europe to generals within the Pentagon as well. They're talking about sacking leading officers there. But anyway, let's not drift too much into politics. The trend is down, basically, Trader 84, and be careful to fight that trend. As you can see, the our sell position has unwound. So euro is and how quickly, see how that can move. Remember, the other one was 0.003. Sorry, it's 0.03. This is 0.3. So if we just go back to the euro, where's my euro? I went to yen, didn't I? So go back to my euro chart and the configuration we were looking at, which was the MACD SAR, and we go back to the time frame we took it on, which is the 5-minute time frame. And we just click auto just to reset the axes. So where were we? So we yeah, we got in here, didn't we? That was our trigger. We didn't actually get in, as I was chatting on, didn't we, there, and it's gone against us, but still the parabolic SAR hasn't flipped, and the MACD hasn't. Let me just get rid of the ATR. Let's get rid of that. Take the ATR out, and we can see the MACD's disappeared. There you go. Vacancy doing stuff online there. It's got a bit. I'm trying to open it up a bit. Doesn't want to play. Reset. There we are. There we are. Okay. Let's take me back to the euro. There we are. So so parabolic SAR still hasn't flipped. So although we're out of the money, it's unlikely to. The impact of the data obviously down, and again the dollar's weakened this time in the 15 minutes since, or not 15 minutes since, the 25 minutes since the date's come out. But we'll leave that running because that's the rules. We're not, and obviously this is, I'm just doing this manually, but you can code all of this very, very simply. So we'll see where we are on that one as time goes on. So any more questions, anybody? Or are we going to wrap this one up? I'll see you tomorrow. Tomorrow's say plenty of say comment today, so that might move the markets from these key players. So watch what Andrew Bailey's got to say. Obviously, Mr. Williams, but most importantly, Mr. Powell himself. Tomorrow, we got some early morning data out of China, some industrial data. We've got GDP from the UK at 7 o'clock. 7 o'clock London time, and then later in the day we've got some CPI data from European colleagues, and then the Empire State manufacturing and some more retail sales from the US is also another key day tomorrow, Friday, for US traders. So take care, everyone. We'll see you all tomorrow, and may your trades always be with you. I'll leave you with Bitcoin, as that's unbound a bit more nicely on the weaker, or stronger dollar, I should say. Bitcoin rolling over on this particular strategy. So take care, everyone. Stay safe, and we'll see you all again tomorrow. All the best. Bye-bye.